Albert Einstein told his tax consultant once that the hardest thing to understand in the world is income tax. Do you feel the same? Hi, I am Kalpit Dave, your NRI financial planner. Through this channel, I aim to simplify the topics around finances and help you make smarter investment decisions. A sharp mind like Einstein finds taxes complex, so it is pretty normal for ourselves to feel the confusion. Recently, I come across with my client a query regarding RNOR status, resident but not ordinary resident, and that compelled me to create this video. Let's start with the basics now. There are three types of resident status defined as per the Income Tax Act: resident, resident but not ordinary resident, and non-resident Indian. To understand this tax status in a better way, let us follow the conditions that we have to understand first. So there are two conditions which we'll have to check first. Either you have stayed 182 days in India in the current financial year, or you have spent 60 days in the current financial year, or plus 365 days in any of the last 4 financial years. If you follow this condition, then you can consider yourself as a resident but not ordinary resident. After checking these conditions, we'll have to check whether we fall under the category of ordinary residents or not. To check yourself for the ordinary residents, there are 2 more conditions that need to be checked. Another 2 conditions that we will have to check is the first: you have either spent 730 days in India in any of the last 7 financial years, and you have spent at least 2 years out of 10 preceding financial years. If you follow any of these 2 conditions, then you are a resident and ordinary resident. If you fail to follow any of these conditions, you are a non-resident Indian. So let us understand this with a little example. One of my clients who's staying in Kuwait from the last 40 years and now planning to come back to India. What should be their tax status and how should they file IT return for the current financial year? Now let me put it in a number. They are coming back in April 2026. How should they file ITR in the year 2026-27? So the first thing that we need to check is the conditions. Have you spent 182 days in India? Answer is yes. Now you are able to follow any one of the conditions in the first part. We'll have to check the second portion. Have you spent 730 days or more in the last 7 years in India? Maybe no. There is a second condition also. Have you spent total of 2 years out of 10 years? Answer is no. Then you fall under the category of resident but not ordinary resident. Now, under the Income Tax Act, the resident but not ordinary resident has been given few special tax treatments. Now there are few lists that I'd like to give you an idea with. The intention here is to help you understand the taxation very easily. There are few tax incomes which will be taxable in India, irrespective whether you are resident or resident but not ordinary resident. Any income earned in India will remain taxable. Any income accrued in India. Now what do we mean by accrued? The income that has arisen or which has the origin in India will be taxable. So the interest on your FDs will be taxable. Any income received in India will also be taxable. So which are the income which will not be taxable? So for resident but not ordinary resident, these are the lists which will not be taxable. Any income earned outside of India will not be taxable. Withdrawals from the offshore retirement funds will remain non-taxable, and any foreign capital gains will also remain non-taxable. Understanding the RNOR tax status is very important for the NRIs who are planning to come back to India or who have recently moved back to India. To have this understanding at this time would help you plan your global income properly, and it will help you to curtail down on the unnecessary tax implications. If you find this video useful and more insightful, subscribe to my channel.